We're going to talk about divorce and financial strategies with divorce. I mean, this is what we're here for. We're here to get strategies, growth, opportunity building, how to navigate tough times. I have Aviva Pinto here from WealthSpire. You are going to be our divorce navigator today.
Okay.
We need you.
I have to tell you, just disclaimer, I'm still on my starter husband. He's done really well, but my co-host here has been through it twice.
I've been through it twice.
Between the two of us, we probably have enough information.
Yeah, so I'll be in the amen corner. When she gives advice, I'll say, yes, that helped me. Yes, I needed that. Yes, I was critical. So I'll be able to definitely do the amens on that because I have navigated 2 divorces. I would love for you to share your advisory expertise. I know you do work with those who are dealing with divorce, but you also work with people going through other big life-changing moments. Can you just outline some of that for us?
Sure. So I am a managing director at WealthSpire Advisors. We're one of your sponsors here, and I'm happy to say that I have some of my colleagues here from our Seattle office, our Maryland office, our New York office, so we are nationwide. And my expertise is really, I love helping women in particular. I do have male clients, but women in particular who are either going through a divorce, are widows, are selling a business and don't know what to do once they all of a sudden have money that they haven't had before, or have inherited money. There is a ton of inheritance going on that are passing to women. So those are really the 4 areas where women are in transitions where they are getting money or getting half the money and need to figure out how to move forward.
So with divorce, let's just center in on divorce for this conversation. Mm-hmm. Can you give us some statistics? I mean, we hear about what's the landscape? What are you dealing with? And just for people in the room, if you haven't been through a divorce, this information will be helpful as you're planning your life cycle, right?
Or for your friends, right? If you've got the starter husband that you want to stay with, this is for your friends. So anyway, just some statistics. Since 1990, the number of people getting divorced over the age of 50 has roughly doubled. And for those over the age of 65 has tripled. So you think about people that are in 65 and older getting divorced at that age, it's unbelievable. But a better statistic is that 69% of the divorces are initiated by women, right? So the reason for that is that women are becoming the breadwinners, and they're not putting up with a whole lot of stuff. And they're basically saying, if this isn't working, I am moving on. So there is a lot of that going on. So, women power, and, I'm sure you can give us a few of your own little tidbits. But that is one of the things that is making the divorce rate go up. Women are breadwinners, and they are leaving their marriages for a number of different reasons. Some of it is financial, and it's not just that it's financial that they are not getting the money they need. Sometimes their partner is in major debt, and they don't want to be a part of that. Sometimes...
Amen. I'll amen that.
Sometimes it is because they have had physical or emotional abuse, and they no longer want to put up with that. So there are many reasons that go into it, and sometimes it's just they're just not feeling fulfilled. The relationship just isn't right. So there are a lot of reasons that go into why people are getting divorced, but the women are the ones that are really controlling it at this point.
So Aviva, you've been working with women and their financial confidence. Can you talk about some of the problems or issues that happen around financial planning? What are some of the mistakes that people make, either financially during the marriage and during divorce, that cause some of this to kind of spiral?
So most of the mistakes that I see of people going through divorce are things that have to do with the assets. So when you go through a divorce, and I'm speaking really for New York area, there are different states, there are 50 states, and there are about 10 states that have equitable distribution, that have division of property that's 50-50, and there are the rest of the states that is equitable distribution. Now, equitable doesn't always mean fair. What you have to understand is what is your personal assets versus what are marital assets. And people go into marriages thinking that, oh, everything's going to be tied together. So there are things called prenups, prenuptial agreements that people are signing. And if you are a woman who has her own business, who has her own assets, I would suggest that you speak to an attorney and get a prenuptial agreement before you go into anything like a marriage. The prenup agreements, and there are also things that you own prior to going into a marriage. So if you've been working for a while and you have a 401k plan, that is your 401k plan. Everything that you have earned up until that point is yours. So I tell everybody, when you're going to get married, make sure you take a picture and you have it documented of what your balance is before going into a marriage. Once you are married, anything that goes into your 401k plans and you have earned, quote unquote, together, regardless of whether you're the one working or not, will be split. But anything prior is your own. So that's very important. Anything you have inherited, as long as you do not commingle that money, is also your own. So what I talk about commingled, what I'm talking about is if the two of you decide to buy a house together and you use your inheritance to buy that house, unless your name is on that title, that house now becomes both of yours, and you can't pull the money back afterwards. So it's very important when you go into a relationship or you're thinking about getting out of the relationship that you understand what is separate property and what is marital property. So that's one of the mistakes. The second mistake I see a lot is on the sale of assets when people are splitting up. So if you have an account that's an investment account that's under joint name, and your spouse tells you, well, you know what, I'm going to give you that account, and I'm going to take the same amount in cash that's sitting in our bank account, et cetera. Okay, so let's just say, for example, there's $1 million in your investment account, and there's $1 million in the cash account. It seems okay, right? $1 million here, $1 million there, but that $1 million in the investment account may have unrealized capital gains. So the stocks or bonds that you had purchased prior may have gone up over time, and you will now have to pay taxes if you sell those assets. So it's very important to make sure that you understand what you're getting in the split. So I always say, make sure you talk to a financial advisor if you're not up to speed on all of that, because they can point out some of those things for you. And then the third thing is the house. When you buy a house together, it generally appreciates in value. And if you say, well, I'm going to keep the house, and you can take money that's the same amount as the appraisal of the house, when you go to sell that house, if you are selling it as a couple, you each get $250,000 as an exclusion against your taxes. So together, the two of you can subtract out $500,000 from whatever it has appreciated since you bought it. Once you are a single person after divorce, that goes down to $250,000. So if you bought your house for $250,000, it is appreciated to $1 million. You have a $750,000 gain. You subtract out your $250,000, you're still paying gains on $500,000. So very careful look at what it is that you're agreeing to. Those are some of the mistakes I see.
And I'm going to amen to those mistakes, those issues, because I have,
You should have met me earlier.
I should have met you 20 years ago to plan this out, because I do concur on the financial infidelity that happens in relationships where you have a spouse doing things with money that you're unaware of, and you kind of pop up and have to deal with that, and that addresses all those issues around emotion and money, because money is emotional as well. So I can definitely concur on some of those points that you made, and thank you for sharing that. I would say I'd love for you to also talk about the practical tips that someone could have as they're in a relationship, as they're going through a divorce, dealing with their finances. What are some tips? What are some takeaways?
So the first thing I tell everybody is to know your budget. Okay? Everybody in this room knows what they make. I will bet you don't know what you spend, right? And if you were to go through all of your credit card receipts and everything else, your ATM, you're grabbing cash, you're going here and there, you're doing your Uber and your Uber Eats and etc., I will bet you that the majority of the people in the room don't know what their budget is. Now, hopefully all of us are living below our means, so it's not a real problem. However, if you know what your budget is, and this goes for people who are getting divorced, not getting divorced, single, married, etc., you will have a better idea of what your financial future will look like. Okay, so I start out with what is your budget? And there are a ton of programs that are on apps, on your phone. If you're old school, you can do an Excel spreadsheet. You can, ask your accountant to help with when you're doing your taxes, but know the budget. The next thing is save for your future, okay? Regardless of whether you're single or married, maximize that 401k plan or 403b plan or whatever pension type plan that you have at work. Most of the time, your companies will be matching, so that's free money. Secondly, it's money you're not going to touch for many, many years. So even if these tariff things make the market go up, down, sideways, whatever, I mean, today it was down, yesterday it was down and then up, whatever happens over the long term, you're going to be dollar cost averaging in with every paycheck. So maximize that 401k and make sure that you have decided to take a picture of it before you get married so that you know exactly what is yours, okay? The third thing to do is, I would say, work with a financial advisor and figure out what is your risk tolerance. How much liquidity do you need? What should be your asset allocation? And make sure that you're investing correctly for yourself. You can talk to somebody else and they say, I have 100% in the market, or I have 100% in crypto. That's great for them. Find out what your risk tolerance is. Find out what your liquidity needs are. Your time horizon may be different than the other person. You may come from a family where, we were talking about women having heart attacks. You may come from a family where people are dying early. Your time horizon may be shorter than the person next to you whose grandmother is 110, right? So each person needs to sit down and figure out what works for them. So work with a financial advisor and do your financial plan. Make sure you understand your debt, okay? Pay off that debt. Credit card companies are charging in excess of 25% on any balance that you haven't paid. And I am finding women who are going through divorce that have never managed their finances before, and they tell me, I'm paying the minimum. That's shocking to me. If you're paying the minimum, which is probably like $25 on a $2,000 bill, you are going to be in debt for the rest of your life, because every month you are being charged that fee. So get rid of whatever debt you have as quickly as possible. I'm not saying debt is bad. I think getting a mortgage for a house, even now at 6 or 7%, when I first bought my house, it was 18%, right? I live in the neighborhood with the McCanns. My interest rate was 18%. I still bought my house. Why? Because it is a long-term investment that you're paying off over 30 years, and interest rates can go down, which they do. I refinanced 5 or so times before I paid off my mortgage. So everybody who comes to me and says, oh my God, I shouldn't be buying a house now, these divorcing ladies, most of them have to downsize, right? Because the house is generally one of the largest assets that they own. So if you're downsizing and you have to sell your house, you have to go buy another house. Don't wait for that. If you know where you want to live, if you find the place that you like, buy the house. 6%, 7%, doesn't matter. It'll go down. You can refinance. So make sure that you're looking for the long term when you're going through these things.
And with our final question, I want to ask you around community, because community matters.
Oh, yes.
I mean, you're a financial advisor. You're part of a community of someone that's going through a divorce. What are some of the other types of people that need to be in a community for someone that's divorcing?
Okay, so the most important person in your divorce is going to be your divorce attorney. Do not try and go it alone, okay? There are lots of rules and regulations. Your matrimonial attorney will be able to advise you on the best way to get through things. The second thing is, if you're not adept at finances, seek out a certified divorce financial analyst. There's a lot of investment managers out there that are certified divorce financial analysts. They know the divorce laws, they know how to coach you, and know how to show you how things should be. When you get divorced, the first thing you have to do is fill out 15 to 20 pages of a document called your Statement of Net Worth. It asks for everything. It asks for whether you have insurance. It asks for your entire budget. It asks for all of your assets, all of your liabilities. It goes so in depth. And when you're going through a divorce, it's really the death of a relationship. And you are in shock, whether you're the one who initiated it or not. You're still a deer in the headlights, and it's very emotional. The last thing you want to do is fill out these 15, 20 pages. A certified divorce financial analyst can help you through that process and get it so that you can move on and get the divorce going.
Well, Aviva, I mean, we wish everyone well in their relationships. We hope that you have the fairy tale of your life forever and ever, but in the event that it's not the case, we will be at your door. Thank you so much. Thank Aviva for her recommendations.
Thank you.